Okay, cool. So what people crossing over into commercial.
Yeah.
Um, Typically, the asset class that I see people cross over into commercial real estate with is going to be multifamily, and usually those guys are stepping up from some sort of residential property, like either a single family home or a multi-unit going up to 4 units, which is still classified as residential.
Yeah.
And I think the biggest things to understand when stepping up into 5+ units into commercial real estate is that the credit box and the lending and the lenders are totally different from what they may have been used to, buying single family homes or doing flips or buying anything up to 4 units.
Right.
When you look at commercial tends to be more property focused, right? So if you bought like a single family home from a bank and there's a residential mortgage, they're still going to look at you just like you're getting a primary mortgage, right? They underwrite your W-2 income and this, that, and the other. In commercial, it goes from property to person rather than person to property,
Yeah.
as far as the underwriting goes.
Yeah.
So, those are some of the things to keep in mind as you start to look for commercial properties. Additionally, you get things in residential that are, you don't in commercial. For instance, you don't get pre-approvals in commercial, right? So residential, you can go get a mortgage pre-approval and then go shopping.
Yeah.
Commercial is a different animal, right? I mean, you can make contacts, but until you got the property and you know what you're doing, and maybe it's even under contract, you're really not going to get loan terms.
Yeah. Gotcha. Yeah. I'm going through a refinance on actually two of our properties we're refinancing. It's like pulling teeth, man. It's
Yeah, yeah, yeah.
provide this, provide that. It's like, man, come on.
Are those residential?
Yeah, two residentials. Yeah.
Yeah. Are you doing like just kind of resi mortgages from a residential mortgage broker?
Yeah. Yeah.
Yeah.
Yeah. Cash out refinance on our primary and cash out refinance on our secondary home.
Yeah, man, I just refinanced my house. I started January 6th and it just closed like 5 days ago. So
Nice, congrats.
there you go.
That's awesome, man. Yeah, that's cool. That's cool. So yeah, definitely in commercial, it's more about probably how the property performs, right? What type of income it's bringing in, rather than how much money the individual him or herself is bringing in, right?
Right. Generally speaking, it looks at real estate as more of a business, and residential looks at it more as something that you're buying.
Yeah. What other differences is there between the residential and commercial? I know there's like phase one feasibility studies, that kind of stuff. Where in residential, you don't have a phase one, right? You're not gonna, when you purchase a house, you're not gonna get it inspected by an environmental company, or you're not gonna get a
Right.
feasibility done to see how well it'll rent in that market. What are some other differences in commercial and residential?
Right. So when you're buying a building, right, you're not going to need a feasibility study. So if you're building, let's say an apartment building, and it was, a pretty good size, like $20 million apartment building, right? The lender may require a feasibility study. But generally speaking, if you're like in the smaller loan or property size, you usually don't need a feasibility study.
Yeah.
As far as phase ones go, um, I typically don't see phase ones in smaller commercial properties unless something pops up, right? So, for instance, around Chicago here, we have lots of old buildings, right? And you just have stuff that is old and may have environmental issues. Like, for instance, we were on a property inspection, and we went in the basement of this apartment building, and there was just a weird wall there, right? And you could kind of see through some holes, and it just so happened that there was an old oil tank that was still back there. That the old owner, it cost too much to remove, so they just bricked it up, right? So stuff like that comes up, in some of these like older properties.
Yeah.
But generally speaking, if you're doing like $1 million mortgage, you're probably not going to need like a phase one environmental. Some of the smaller mortgage, smaller balance like agency finance, so that would be like your Freddie, your commercial Fannie Mae, Freddie Mac, FHA, may do like a desktop sort of environmental review to see if there's anything that pops up in just online and public records.
Yeah.
If you get up into the like for instance, if I do like a mortgage on like a $15 million loan on an apartment building, right? Then it's full spectrum, right? Then it's phase one, full property condition assessment, full appraisal, all this good stuff.
Yeah. Wow, that's awesome. Wow, interesting. Tell us a little bit more about your company. Why, how are you different from other lenders? I know there's tons of, commercial brokers out there. What do you guys do different that, people would prefer to do business with you?
Sure. Yeah. So it's a good question. There are a lot of, commercial mortgage brokers out there. You know, one of that does set us apart from other shops is candidly, I think I've probably been sustainably in this business a lot longer than most. Like to be in the same position for 12 years and still doing loans and doing what we do through 2 recessions now. We definitely have a lot of insight into kind of how the capital markets evolve and the different lenders. My background coming from sort of like an interbank sort of like interest rate point of view, I get a little bit different inside and have a little bit different understanding into like how like mortgages are actually put together and how they price and what may happen with like index rates and rates as we go through the process. Some of the other areas where we're a little differentiated is we also get very involved in higher cap stack products. And what I mean by higher cap stack is like higher up in the capital stack. Like if your loan is down here, up here is your equity. And we also get involved in arranging mezzanine financing and joint venture equity for properties and stuff like that. We're not a broker dealer, so we're not selling securities, but we do arrange partnerships on equity for transactions.
Yeah, let's step back a bit. What is mezzanine financing?
So, your mezzanine financing, today mezzanine financing for commercial properties has realistically just kind of turned into like a higher level kind of second mortgage almost. It basically means that it's going to sit behind the first mortgage. It's going to have, your last dollars of the mezzanine loan are probably going to go up to somewhere around 85, maybe as much as 90%. Most of the higher, loan products in that space are usually pretty good fits for short-term situations. For instance, let's say you are going to buy an apartment building and do a value add deal where you're going to renovate it, take it from a C-class building to a B, raise rents, and then you're going to raise value and either sell or recapitalize it with a refinance afterwards, right? So if you're going in and you have an 85% full capital stack between the senior and the mezz, on your way out, maybe the last dollars on the mezz is now a 70% loan to value. You know what I mean? So it works really well in value creation type scenarios to be able to pay off the mezz eventually.
Yeah, gotcha. So you mentioned financing up to 90%. Is that typical when you come into a deal, being able to bring in 10% down and take over a commercial property?
It depends on what it is, right? So 90%, kind of financing again works really well in value creation scenarios. Yeah. If you're buying a deal where it's fully baked already and there's just not that much upside, 90% just it's probably not going to work, right? I mean, it's not going to debt service and all this stuff. So we have been able to get up to 90% loan to cost, in deals where there is a pathway to like a shorter term value creation, whether that's by bumping rents, you're renovating the property, or something else. Typically, if you're going to be that high in a cap stack, you want to make sure the property value is going to increase in a short amount of time to be able to get the out. So.
Yeah, gotcha. And let's say you require, I don't know, 20% down to take down $1 million property. Let's say the person only has 10% of that in cash. Are you guys able to use other assets as the collateral or do something a little creative to help them get into that deal?
So it's possible, right? But I wouldn't say it's possible from every lender, right? So a lot of commercial lenders, they don't necessarily want other assets kind of involved with the asset they're financing. So a lot of commercial assets, end up being, having to be held in a corporation that's called an SPE or special purpose entity. And the purpose of that is to be bankruptcy remote, right, from anything else that may happen. I see, deals like you're describing where, you're a little light on the down payment. Maybe you want to use equity in different property. I could see like a small local bank, being kind of open to that, right? Say like, hey, well, you've got your home's free and clear. What we'll do is we'll just do a blanket mortgage, right? Against the house, against the commercial asset. And like smaller local banks and regional banks are usually more willing to do stuff like that, like you're describing. Secondary market lenders, right? Like agencies and, actually in larger deals, usually won't, because they want that SPE aspect of the deal.
Yeah. Okay. Interesting. Yeah. Cool. And are there any net worth requirements you guys look at in an individual, somebody who's maybe trying to get their loan on their first property? Do you guys want to see like X amount of net worth, net worth equal more the property?
Yeah, I think if you ask anybody kind of in the industry, right, like what are the net worth and liquidity requirements, I think the general like boilerplate answer is going to be a net worth similar to the loan amount and around 10% of liquidity of the loan amount out after the closing, right? So if the loan amount's going to be $1 million, they want to see your net worth close to $1 million and maybe like $100,000 in personal liquidity after the closing. To be honest, those requirements seem to be pretty, fluid. And I mean, look, a lot of people like this, are buying their first property. So I think those requirements, as far as net worth, especially, maybe a little, there might be some give and take there. Generally speaking, I think having having the cash to put down and a little bit after speaks a lot of volume, and a lot more than just net worth, right? Because what is net worth? Net worth is usually illiquid assets, anyways. And I think having actual cash in the bank speaks more than net worth.
Yeah, that's true. Yeah, that's very true. Cash is king, right?
There you go.
Great. What's the debt in the commercial property? Excuse me. There's a debt service coverage and stuff like that. All these fancy you guys use. What is it that you guys look for in a property? Would you guys finance a property that's losing cash, or how would you make that work? I mean, if the potential owner has a plan, are you guys able to do anything creative to get that deal financed?
Sure. So if it's a stabilized property, right, it depends on what asset it is, right? If it's an apartment building, maybe we can get down to a 120 DSCR, right? A 1.2 DSCR. It's basically you have $1.20 of like net operating income for every dollar of loan payment, right? And that's really going to be the bottom, right? I mean, if you're buying a stabilized property, nobody's going to get involved with it if it has anything less than that. So definitely not negative, right, debt service. If you're getting into a deal that's more of a value add deal, right? I mean, and that's what goes back to what I was talking about with mezzanine finance, those types of deals, right? Where there's a short-term pathway to value creation and stabilizing it. Yes, there is the ability, to kind of get involved in a deal where there might be a negative debt service day one, because you're going to do something to the property, right? You're going to renovate it. You're going to lease it up, X, Y, Z. And, the idea here is you've got a provable way and a pathway to get to stabilization, to increase value, to get the NOI up. And yeah, I mean, you can go in day one having a negative debt service. Typically when that happens, what we'll do is we'll do a bridge loan and we'll create an interest reserve, right? So you've got that carry reserve to pay the loan, right, to get you through the period where you're going to have that deficient debt service up until when you can start paying it.
So almost like a working capital pool, almost in a way.
Right. So it's a reserve, to just to pay the loan payments in the meantime, right? And typically with those deals are going to be renovation deals, right? So you're going to have probably an interest reserve, a capital expenditure reserve for renovations, pretty much all the money that you need to get that property to stabilization and renovated is going to be capitalized up front and held most likely with the lender.
Yeah, gotcha. Cool. COVID has really changed this world. What do you think is the future of commercial real estate, given our current state, and I know that we had like, federal laws in place to prevent people from getting kicked out. I think those have recently been amended. How do you see all of that affecting commercial real estate, and where do you see commercial real estate a year, 2 years down the road?
Yeah, I mean, it depends on the asset class, right? I mean, COVID in general, and when stuff like that happens, I think the biggest thing about it was it was a trend accelerator, right? And there was certain parts of the market that these things were already happening. For instance, like retail and like online adoption of shopping and less foot traffic in department stores like that. It was already happening. COVID just pushed it over the edge, right? So that trend I think accelerated very quickly, and you've seen a lot of of retail kind of evolve because of that. For instance, like enclosed malls, a lot of those are going right, but some of them have been able to kind of weather the storm. So like retail is kind of like evolving more into this like experiential type foot traffic, and then you have stores around you, right? You got to get something that's going to bring you there. Multifamily in general, I think the general trend there has just been more government involvement, right? And I think if you talk to a lot of property owners, they have started to feel more like their tenants are being, and they're not, but just that they're being pushed more into like a dependency type of role onto the property owners, right? Especially when, even if they don't pay you, you can't evict them, right? So I'm starting to see just more oversight just in general, like in Denver. Denver just came out with a commercial or a apartment renter's license that you have to get now just to own an apartment building and rent it out. So, and that comes along with everything you expect: fees, property inspections, all this good stuff. I hadn't heard of one of those before, right? So, I think if, everything that's happened, since COVID, I think in housing is pushing towards, more social safety nets and government oversight. And then, when you look into the other sectors, a lot of it, has to do with just the trends towards, more online adoption versus foot traffic. And you see that not only work for home and office, but in retail and, everything else. And industrial has taken off, right? Because now you need more warehouse and logistical space, because I mean, Amazon is not only gobbling up, but everybody else is. So.
Yeah, exactly. Yeah, everything getting delivered to your front door, right? People
Yeah.
are learning how to adapt in this new world. That's awesome. Cool. As we close out, maybe just a few questions. And yeah, thanks again for all the lending knowledge you've shared. What's one of your favorite books?
I really like the Freakonomics books.
Freakonomics. Okay, I've seen that.
Yeah. There's always some great kind of different point of views of how to look at business in general. About like game theory, finding blue ocean, stuff like that. So there's definitely some good tidbits you can find in Freakonomics. That was always one of my favorites. So.
Yeah, that's awesome. Are there any other books that maybe motivated you to kind of go out on your own and start your own business there?
I wouldn't say it was necessarily, reading books that were the motivation. I think, reading books were, it was probably like, looking for tools and, kind of like different points of view of looking at things. I was always kind of motivated to, work for myself and find something that, I could do independently of just having a job, right? Even trading. I was an independent contractor when I traded, right? Yeah. So I was, maybe they didn't treat you like that all the time, but I was still, like doing my own thing, technically running my own operation, right? Yeah. So, I think every aspect, I've ended up, doing, to make money has always been some sort of independent business.
That's awesome. Self-driven entrepreneur, right?
There you go.
That's cool, man. Awesome. How can our listeners get in contact with you?
We are exceptionally easy to find and contact. Our website is cloptoncapital.com. I'm on LinkedIn. I've got like 30,000 connections. Super easy to find there. Call us up directly. on the phone number off the website, or, feel free to email me. All my contact information is public, right on LinkedIn too. So yeah, happy to chat about any deals, answer questions, anything at all.
That's awesome. That is very true. Your information is very public. I think when you added me, the first thing I saw was your cell phone number.
There you go. Yeah.
Great. Well, hey, thank you so much for being a guest on Become a Billionaire with me. And yeah, thank you for joining.
All right. Thanks so much.
Thank you for listening to the Become a Billionaire with Me podcast. If you liked what you heard, please help by giving us a 5-star review on iTunes. If you have any suggestions, please feel free to make a comment in the comment section. Let's become billionaires together.